Hi there, I'm glad you're tuning in to this week's episode of What's New in the DeFi space, where I share with you all the latest and hottest news so that you're up to date. My name is Kierin and I'll be your guide on your DeFi adventures. The DeFi space is complicated, it's dangerous, there are many scams, hacks, shillers, and a lot of people that are out to take your money away from you, and I want you to be safe. And I'll share with you the tips and tricks that I've learned along my journey, give you knowledge, the tools that you need to make sure that you succeed on your journey to financial freedom. With that said, let's dive right into the video, and I'll start with the traction that Ethereum has been getting over the last few weeks. That is fantastic. So if you go onto the Google Trends and you search for Ethereum, you can see here that the interest over time has been increasing. August 2019, even February 2020, there's not been that much action happening, but now at the beginning of July, until the end of July, there's been a lot more search volume for the Ethereum search term. What is also quite interesting is if you look at the interest by region, of course, you've got quite a lot of interest coming out of Canada, United States, different South American countries, Brazil. We've got many Brazilian viewers, which I think is fantastic. And then, of course, you've got also a little bit of search interest by in Russia. What is very interesting is the massive increase of search interest out of Africa, especially out of Nigeria. So here, the term, they've got a very booming economy, so it also explains why many people there are maybe looking for alternative ways to invest their earnings. So basically, I think this is really interesting. What is also fascinating is if you look at the past 5 years, we can see the last bull run. There, of course, the search term for Ethereum exploded in terms of volume. And yeah, I feel like now we are approaching something pretty interesting. Like, we're still not at the same levels as during the 2017 bull run, but a lot of people are starting to get more and more interested in Ethereum. So this is very good news. It means we're on the correct path. Now, even though Ethereum is great, unfortunately, Ethereum Classic experienced a double spend attack last week. 2 double spend attacks. Double spend means that you spend a certain amount of coins 2 times. That means that you profit twice. And basically the key takeaway of this is the attacker was trying to double spend 465,000 Ethereum Classic, around $3.3 million US, and the attacker successfully double spent 238,000 Ethereum Classic, 1.68 million for Bitfinex and a few other crypto services. And basically he rented a lot of hash power in order to do this double spend attack successfully. And in this graph here, you can see the double spend attack. This is the first one where you see both transactions highlighted and circled. Maybe I can zoom in. This is attack 1, and here's the second attack, where here he does the first spend, and here's the second spend, and here he successfully manages to double spend the amount. Definitely not good. The key takeaway from this is probably stay away from Ethereum Classic and stay with the real chain, which is Ethereum. There are many people that are contrarians in the space, and they believe that one chain is just going to take over everything. But in the end, it's always the most popular chain that wins, and at the moment, the most popular one is, of course, Ethereum. So Uniswap is growing at a super fast pace. So as Ethereum DeFi craze continues, Uniswap is processing over 100,000 transactions per day. So the interest for decentralized exchanges has been growing massively over the last few months. We looked at that quite a bit in a few of my recent videos. And now Uniswap alone is processing around 35% of Bitcoin's daily transaction count, which is enormous. So the Uniswap protocol just passed 100,000 daily transactions. That's our 1.2 transactions per second. And for Bitcoin, that would be 325,000 transactions per second, 3.6 TPS, and Uniswap 110,000 transactions per day. And I don't think it's going to take too long until Uniswap performs a lot more transactions per day than Bitcoin. I think it's just going to take, it's in a matter of months, a few months. The volume is 121 million, total liquidity 260,000. And to put that into perspective, with these 100,000 transactions per day, Uniswap is processing around $100 million US of volume per day. And Coinbase is doing 500 million, so around 5 times more. But Coinbase is a massive company and Uniswap is a decentralized exchange. So in a few months, Uniswap is probably also going to surpass the amount of trading volume per day that is done on Coinbase. Incredible growth, to say the least. DeFi tokens banned link outpace Bitcoin price by gaining 100% in 10 days. So if you're one of the lucky ones that managed to secure a few banned tokens, link tokens in the last few months when they were relatively low, then you definitely have had healthy portfolio growth and you're definitely in the green there. And yeah, this is fantastic. So two of the most notable performers are Band Protocol and Chainlink. So both of these are Oracle projects. That basically what they do is that they allow real world data to go into smart contracts. So at the moment, most of them, Band and Chainlink, are offering price data to smart contracts, but hopefully in the future they're also going to offer other kind of data. So Chainlink, as far as I know, they also offer a type of randomness, so VRF option, and this is randomness data information that gets sent to smart contracts, and that is very useful for different games that use RNG and a type of randomness in order to be fair for the players. So for example, in a 3D world, you'd have weapons spawn randomly across the map. Well, basically Chainlink could provide this random factor to the game in order for the players to get these weapons randomly. So what's behind the DeFi token pump? Well, of course, many of the decentralized exchanges are pumping with a lot of users using DEXs, and DEXs are the main clients of Oracle providers such as Chainlink and Band, as well as a lot of hype. There's an incredible amount of hype behind Chainlink, so that also explains a lot of the growth. So in order for DeFi platforms to run seamlessly, they need to fetch market data from various websites and blockchain networks, and this is where oracles come into use, so basically what I just said. So oracles allow for off-chain data, real-world data, to be integrated with the smart contract parameters that exist on the public blockchains. In the figure below, we compare price gains between Chainlink and Band Protocol over the past 3 months. So here you can see the increase, for example, for Band. And especially here, when Band gets listed on Coinbase, there's a massive price increase. And here, Huobi lists Band. Now, I definitely want to put out a warning here. Chainlink and Band have definitely increased a considerable amount. I think a few 100%, maybe like 200 or 300% over the last 3 months. And I definitely recommend not to just FOMO right into these projects right now. Maybe buy just a little bit if you're interested in the project, and wait, because very often after such massive price increases, there's a dump that comes afterwards. So don't go all in, maybe just a small portion, wait a bit, and then maybe go in again. Just be careful, FOMO can get you wrecked super fast. Compound gets ready to deploy decentralized Oracle. So we just talked about Band and Chainlink being the forerunners as Oracle projects, and now Compound also wants to get in the game, as open price feed is definitely something super important for many DeFi platforms. So the Compound protocol is set to introduce open price feed, a decentralized Oracle whose crypto market prices will allow the project's lending system to function. The open price feed is currently being tested on a variety of networks. So Compound developers are developing the community to test the new system in order to integrate it into the protocol as quickly as possible. So the interesting aspect of this new price feed from Compound Finance is that the system relies on price reporters and posters, and the reporters will be exchanges. For example, at the moment it's going to be Coinbase Pro, who will regularly sign price data with the public key, and posters on the other hand will be responsible for publishing the signed data to the blockchain. So posters are permissionless, meaning that anyone could become one if they wish. So as you might remember, Compound Finance recently launched their token, which allows comp token holders to make votes on new changes to the protocol. So this is completely decentralized, and I think it's great that they're also moving into the Oracle price feed segment, because the more oracles that are around, the more decentralized it becomes. And I think that's also one of the reasons why it's very important to have Chainlink, Band, and maybe a few other price oracles to make sure that the price feed is completely decentralized, because if something would happen to one, then it might be a big problem for many decentralized finance applications. An unfortunate thing happened with the open decentralized finance platform, and there was an exploit. An exploit affected the open ETH put contracts, was discovered. All other open contracts other than the ETH put contracts were not affected. So what happened exactly? Well, basically this exploit allowed an attacker to double exercise O tokens and steal the collaterals posted by certain sellers of these puts. So the O tokens, it's a ERC20 token, and basically you'd have the O token and it would be backed by a certain collateral, and the hacker managed to spend these O tokens but also take the collateral back, which is not great. So for people that are users of this DeFi platform, there are a few things that you can do. Users shouldn't be scared, because if you're O token holder, what you can do is you can sell your current put options for 20% above the market price on Deribit. Maybe wait before you use the open DeFi platform until they ironed out all the bugs and the security aspect of it. And also, as a warning that DeFi is still in its baby shoes, things like this can happen. I think it's great that the open platform figured out a way that the users won't lose out, that they won't lose all their funds. And I hope that more DeFi platforms implement some kind of a safety mechanism, maybe in form of a smart contract insurance or some kind of safeguard against smart contract hacks, because this is definitely going to happen. The more and more platforms and smart contracts get written, mistakes happen all the time, especially in code. If you enjoy maybe playing some video games that are on the bleeding edge of a technology, then I'm sure you enjoy Dark Forest, which is a real-time strategy space warfare game running in the browser. And the exciting thing about it is it runs on zero-knowledge snark technology. So zero-knowledge snark is super interesting. Basically, it allows for a lot of privacy with transactions, but the main benefits are basically the high scalability of transactions and the reduced fees. So applied zero-knowledge ZK cryptography on Ethereum has been taking a lot of leaps and bounds in the last months. And the main benefits are the enabled efficient in-browser zero-knowledge proving and verification that allows for higher transactions per second. So this game, Dark Forest, is a fully decentralized and persistent real-time strategy game. It's a massive multiplayer online space conquest game where players discover and conquer planets in an infinite, procedurally generated, cryptographically specified universe. So a lot of buzzwords, but basically it means it's running on the Ethereum blockchain with this zero-knowledge technology, which allows for high transactions per second and low fees. And basically that's what everyone wants. So this layer 2 scalability solution is definitely in a good place on this DeFi game, where actually it's just a dApp. Now, of course, this game is still running on the test network, so it's not really using real ETH, but that means that you can try it out for free. You can get some Eruption test ETH, and then you can try it out. You can go to the website zkga.me and you can play Dark Forest. You'd have to log in. So you'd have to add your wallet and all the information, and then you can start playing on this game. So very interesting indeed. I might make a video about it in the future, and let's see. I'll have to try it out for myself. So next up is 1inch Exchange. So 1inch is my favorite decentralized exchange aggregator around, and they're launching an AMM automated market maker called Mooniswap. So I really love the name Mooniswap. It just rolls off my tongue. So decentralized exchange DEX aggregator 1inch Exchange has launched its own automated market maker, Mooniswap. And AMMs, you might not be aware what AMMs are, but AMMs are basically liquidity pools and allows for much cheaper transactions between many ERC20 tokens. So it allows users to easily switch between tokens in a decentralized and non-custodial manner. So according to 1inch Exchange, current designs in some AMM models result in high slippage on large trades and impermanent losses for traders on liquidity providers. So I'm sure you've been using a certain type of decentralized exchange or decentralized exchange aggregator in the recent months if you've been playing around with DeFi apps, and you might have noticed that the slippage, depending on which one you use, is relatively high. Sometimes it's like a few percentage because of the low liquidity. So hopefully with the better algorithm of this AMM, the slippage will be reduced. I think the best aspect, especially if you want to become a liquidity provider, that means you lock up 2 coins, basically the trading pair, and then you earn on the fees. And with this new AMM, liquidity providers will be earning a lot more in fees. So the aggregator said it is expecting Mooniswap to generate between 50 to 200% more income for liquidity providers than Uniswap version 2 because of the price slippage profits it believes Mooniswap will bring. So that is fantastic if you're interested in earning a little bit more of revenue through your cryptocurrencies. If you've got two tokens, for example, you might have ETH and DAI, and then you can lock it up into an ETH DAI liquidity pool and earn money based on the trading fees. So other people that are trading, exchanging between these two tokens, you'll be earning a fee. If people are interested in a video where I explain how you can do that, well, write it down below and I'll surely make one like that. But yeah, so really looking forward to Mooniswap. So dYdX, a decentralized trading platform, a pretty big fan of it. I'll be releasing a video of it on how to use it. I think it's going to be next week or the week after. I've already made a video, it's scheduled. So the ETH USD perpetual contract is live for trading on dYdX. For the first time, traders can get up to 10x leverage on their ETH. And basically, a perpetual swap tracks the price of an asset. So in this case, this perpetual contract ETH USD will be tracking the ETH USD price, and it will be the 10x of that. So basically you could put in $100 and you'll be trading with $1,000 ETH USD perpetual contract. Fantastic if you want some more exposure and a little bit more risk in your trading and investing. Definitely don't go all into these contracts because they are a lot more risky. If the price dips too much, then you'll get liquidated. But it's great that they are offering now the ETH USD. They do have the BTC USD 10x perpetual contracts, which are fantastic. So now about some hype news. Definitely don't go all in this. Yam Finance explodes in surprise launch, garners millions in just hours. So if you're looking for an extremely risky investment, I'll quickly explain what this is. So Yam Finance, what is it? And what is the Yam token? And basically, the Yam is like a combination between YFI token and ample fourth, because it's got the elastic supply to seek eventual price stability. So that means if the price is above $1, then the circulating supply gets increased to reduce the price of a single token. And if the price is underneath $1, then the circulating supply of tokens gets reduced so that the price goes back to $1. We've got a governable treasury to further support stability, fully on-chain governance to enable decentralized control and evolution. And at its core, Yam is an elastic supply cryptocurrency which expands and contracts supply in response to market conditions. So basically, in the same way that Ampleforth does it, initially targeting $1 per Yam, this stability mechanism is supplemented by one key addition to existing elastic supply models such as Ampleforth, and a portion of each supply expansion is used to buy YCRV, a high-yield USD denominated stablecoin, and add it to the Yam treasury, which is controlled by Yam community governance. So they've got also a lot of liquidity pools, and people are just jumping on it out of hype. So there's an incredible amount of hype around a lot of yield farming tokens, and with the massive yields that you can get, there's also a lot of risk involved. So just be aware of that before you jump into one of these tokens, because it's increasing massively in price. Now, it is possible that it continues to grow. Me personally, I stay away from these crazy hype products. I prefer to have a conservative, maybe a few 100% return on investment per year. I'm happy with that. I know many people are looking for the next 1000x, 10,000x token, but in my experience, it's much easier to have a few 100% per year and to have a lot less risk in the space. But I wanted to share with you this token since it's one of the hottest tokens that is released recently, and many people are talking about it. What's super interesting is if the growth in DeFi continues like this, like the demand of ETH in the DeFi space continues, it will outstrip new daily supply by the end of 2020. So that is to say, if demand grows further, or if the new supply rate is reduced by a greater percentage, daily demand for ETH in the DeFi services would consistently outstrip the new supply of ETH by November 2020. In other words, what this paragraph says is that if you've got a lot of demand but low supply, then you'll have a supply shock, and it will increase the price dramatically. So the less supply there is and the more demand that there is, the price is just going to go through the roof. And I think my Ethereum price prediction video clearly explains the potential price targets that we could reach should this demand and supply shock continue as it's been happening over the last few months in the DeFi space. So let's quickly talk about Ethereum 2.0. I've got a super interesting a post that I found by Danny Ryan, and it's a demo of Ethereum 1.0 running on a shard on Ethereum 2.0. So many people have been asking what exactly is going to happen with Ethereum 1.0 as soon as Ethereum 2.0 launches. And basically, like I mentioned I think in my bus and train analogy, you've got Ethereum 1.0 will be taken as a whole. The proof of work element is going to be removed, and it's going to be put as a whole into Ethereum 2.0 shard, one of the shards, and basically that's it. And this Ethereum 1.0 is then going to be able to communicate with the other shards running on Ethereum 2.0. So there's going to be 64 shards in total at the moment. It might be increased, but that's not very sure. And in this demo, the Ethereum 2.0 coordinator Danny Ryan demoed an ETH1 shard running on the Ethereum 2.0 proof of stake network. And this is great, shows that they already implemented a large portion of this migration of ETH1 to ETH2. So the unification of ETH mainnet with upgraded ETH2 consensus is the most exciting thing happening in a year or so. And that will complete the upgrade. So this unification and migration of ETH1 into ETH2 is basically the end game. There might be a lot of other things that have to be done, but that would be one of the remaining aspects of the Ethereum 2.0 upgrade. And I think this is fantastic. It might take still 1-2 years until they're completely finished, but as long as it works, as long as they've got the massive scalability that Ethereum 2.0 is supposed to bring, then the DeFi space is just going to go. And I don't think it's even going to go to the moon. It's going to fly past the moon towards the stars, because the amount of people that can then use the DeFi apps, there's no limits. The scalability aspects will be addressed, and the fees are going to be incredibly small. That means you can do hundreds and hundreds of smart contract calls, and you can do a lot of transactions without paying a fortune to use the Ethereum blockchain. The last article I'd like to share with you, I think it's super interesting. I won't go into it in super detail because it's a long article, but I like the metaphor and the analogy that they're using to explain Ethereum 1.0 and Ethereum 2.0 in a way that it makes it a lot more easier to understand. And it goes into the future of Ethereum 2.0, the current state of Ethereum 1.0, and basically what they compare Ethereum 1.0 is with like an island that is just jam-packed with houses and people living in it, and it's super complicated. It takes a long time to move from one area to another, which is a good representation of the fees. So Ethereum 2.0 is still a ways away, but the tiny island of Ethereum 1.0 is already populated to the point of a saturation. And then it goes on to explain Ethereum 2.0, compares it with cities, suburbs, farmland, and basically those would be the different shards with different types of platforms, maybe on one shard or another shard, depending on how fast they want to be. Then you'd have like different cities. So for example, the DeFi shard would be one massive city on Ethereum 2.0 residing on one shard. And then you might have another type of dApp city being on another shard, maybe like games. And it does make sense that apps that are similar to each other are on the same shard, because they might have to transact with each other a lot more than shards that are in completely different categories. So that was it for this episode of What's New in the DeFi space. I hope you could gather a lot of vital information to help you along on your DeFi journey. And yeah, with that said, I'll catch you in the next one. Have a good one. Bye-bye.